Bloomberg's world headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the Snam model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big, big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP. And I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
great sci-fi art of the mid-20th century teased a vision of the future with one distinct element in common: a life for humans in outer space. Whether vacationing on an exotic new planet or commuting to the moon for business, space travel seemed like it was just around the corner. Yet here we are, a half-century later, and only about 500 human beings have ever left the bounds of Earth's atmosphere. But thanks to a set of ambitious private companies betting on the promise of space tourism, that long-awaited future could be here sooner than we think. For most of the history of spaceflight, governments have been the prime force behind nearly every aspect, from planning to funding to crew selection. But as early as the 1980s, proposals for commercial space tourism began to emerge, along with innovative solutions for getting people there, such as the wild concept of sticking a 74-person passenger cabin in the cargo bay of a NASA space shuttle. Although various non-astronauts have been selected for missions over the years, true space tourism didn't happen until 2001, when an entrepreneur named Dennis Tito coughed up an estimated $20 million to hitch a ride with the Russian Federal Space Agency for a week-long vacation aboard the International Space Station. 20 years later, we're seeing a new contender in this final frontier of tourism: private companies.
It's becoming a private enterprise situation, still very high risk with a high reward, potential reward. But, government is really out of the business of flying people now, and it's really going to be companies like Elon Musk and Jeff Bezos and Richard Branson that do that heavy lifting. Commercial space tourism is usually about taking the non-astronaut, the private citizen, into an orbital or suborbital flight. So you get a short amount of microgravity experience, and you can float and take some photos. And then you come back. This was something that technology had gotten to a point where the private sector was going to make a business out of this. There are multiple companies that want to get to the place where they fly people into space.
The first of these is Blue Origin, founded in 2000 by Jeff Bezos. Using the autonomous rocket system New Shepard, a tribute to the first American in space, Blue Origin plans to launch up to 6 passengers at a time, offering a rarefied treat of 62-mile-high views and a momentary experience of weightlessness. Booking officially kicked off in May 2021, with the very first seat to be auctioned off for charity. Meanwhile, Richard Branson's Virgin Galactic has also been pursuing a viable form of suborbital tourism, aiming for a launch in 2022 once Sir Richard himself has taken a flight.
I'm hoping to be able to go to space. I'd love to be able to coincide it with the moon landing and go to space. So I've got the whip on the team, and we'll see how we go.
The company claims to have lined up over 600 seat reservations so far, including Justin Bieber and Leonardo DiCaprio. Virgin has projected that the final cost of the ticket will be at least $250,000, or roughly $50,000 for each of the 5 minutes or so of weightlessness that you'll get to experience. Although costly, both companies' offerings aim to make suborbital flight a regular form of adventure travel, eventually driving down costs at scale to expand the customer base beyond the orbit of celebrities and billionaires. The third major contender is Elon Musk's SpaceX, which has set its sights even higher on orbital flights, which are
a whole nother level of complexity and energy and danger. When you go suborbital, if you're just going to go up above the von Karman line, which is 100 kilometers or about 62 miles, you only need to get up to maybe 5,000 miles an hour to get up there, and you go basically straight up and then straight back down. You don't have the reentry heating that you would see coming in from an orbital. So when you go orbital, I don't care if you're a baseball or a battleship, you've got to go 17,500 miles per hour, not just 5,000 miles an hour. The energies involved are much greater. By doing that, SpaceX has gone another level up, and that's what they're doing with the Inspiration 4.
Visit inspiration4.com for your chance to go to space.
Inspiration 4 is the first planned all-civilian mission into orbit, slated to launch in late 2021. The crew will bring their own set of diverse perspectives and backgrounds and experiences to test how a group of different people, namely people who aren't professional astronauts, could fare in space.
Until now, astronauts have had to be physically perfect, and this mission is changing that. And so I feel incredibly honored to be representing those who aren't physically perfect. At age 10, I was diagnosed with bone cancer, and I was treated at St. Jude Children's Research Hospital. And I spent a year there undergoing intense chemo and also surgery that ultimately saved my leg. I now work at St. Jude as a PA, a physician assistant, and I work with leukemia and lymphoma patients. The kids we work with are so brave, and they are very excited to watch me go to space because this is showing them that, you know, they're capable of doing this as well.
Haley, along with 3 other crew members, will spend 3 days in space, orbiting the Earth every 90 minutes before landing back off the coast of Florida.
Well, when you think about access, the first astronauts for the United States came from the test pilot side. And so women weren't allowed to be a part of that. We have somebody in their 20s, somebody in their 30s, somebody in their 40s, and somebody in their 50s. And so there can be access in all kinds of ways, whether you're talking about age, whether you're talking about gender, whether you're talking about race and ethnicity, and all of those things.
The first time, people are going up into space and not sent there by a superpower like the United States or Russia or China. Well, that's like really significant. And you've got to be very thoughtful about it. The whole game plan right now is to make space like really affordable and accessible for everybody, so that you can have fishing buddies going to space someday. But the first is special. And so with that, we wanted to have a crew selection process that could make space available to everyday people.
Getting to space is only the first step for space tourism. The next challenge is what to do and where to stay when you get there. Axiom Space is planning to launch the first segment of a new commercial space station in 2024. Their $2 billion project, called Ax Station, will become the first free-flying private international space station. Or, to use a more consumer-friendly term, a space hotel. Axiom isn't the only company out to make your space stay a little more comfortable. Bigelow Aerospace has been building what they call expandable habitat technology, like their B330, an inflatable pod module that expands once in orbit.
There's even one attached to the International Space Station right now they've been testing. And you take it up and it's rather small, and then you inflate it, and it seems to be working very, very well. This is likely to be the first kind of tourist hotel that you're going to see up in space. First of all, it's easier to carry instead of this giant tin can with all of that. The inflatables are lighter. You can just blow them up, and they get a nice big size for about less than half the weight probably.
But even as space missions become accessible to civilians,
the risks of going into space are incredibly high. And you could die 1,000 ways that we can think of and 1,000 other ways that we can't think of.
This is Michelle Hanlon. She's a space lawyer at the Mississippi School of Law, focused on protecting humans in outer space.
Now, I'm not an attorney for any of the space tourists, so I haven't been privy to their private contracts. But I can tell you that the FAA requires certain waivers to be in those contracts. So, for example, the FAA says, well, we're not going to make you make your spacecraft to a certain safety level. We are going to make you, spacecraft operator, make sure that you inform your space tourists of all of the hazards that you know of. I'd imagine a very long waiver, all the ways you can die in space. And you have to understand that there's health risks, and you have to indemnify the US government if you are launching from the United States. So those are things that we know a space tourist has to sign and has to waive. So now let's go back and think about our space flight participants. The FAA calls space tourists space flight participants. They don't call them astronauts. Why is that important? If you're not an astronaut, there's no obligation to rescue you if something goes wrong. It's a lot of money to set up a rescue launch. If it can even be done, it's something really important to think about, and that difference as we cross this threshold from having astronauts in space to having real people like me in space.
And when we are able to make it to space reliably enough, there's still a host of other legal and ethical issues to consider before space tourism can truly take off.
There are so many gaps in space law that we are going to have to put in a lot of sort of basement ideas. And so, for example, the Outer Space Treaty is a treaty that offers principles and guidelines for state activities, for the activities of national governments. It doesn't talk about private entities. It doesn't talk about humans in space. So now if something goes wrong, so let's think about all the times hotels on Earth are sued, right? So slip and falls. You step on something in the bathroom, you sue the hotel, and it becomes a private lawsuit. because of the vagaries of international law, if something happens in space, well, boy, you can sue the state that launched your spacecraft, you can sue the company that brought you there, you can sue the hotel, you can sue the individual, you can sue every government related to that, because the way the Outer Space Treaty and the Outer Space Regime have set this up is that anything that happens in space first has to go through a diplomatic channel before you think about suing in a court of law. And so every single slip and fall in a space hotel is a diplomatic nightmare. And so we really need to figure that out before we start sending a lot of people there. You think about human rights in space. Here, we don't think about a human right to oxygen because it's kind of all around us and free. It's not in a space hotel. So what happens if something happens and the oxygen depletes? Who gets the oxygen first? And then, of course, let's not even think about the labor. How do you treat your labor in a space hotel where that person may be there for 2 or 3 years without coming back to Earth? So a lot of things to think about.
Space habitats are more likely in the near future to focus on research missions and be a home for experiments that can't happen as easily back on Earth.
Space hotels, I think they garner a lot of headlines and a lot of news, but at the same time, that's not the first thing that you're going to see happen. They don't offer the compelling business case, I think, that you'll see from a place that wants to manufacture pharmaceuticals or a new type of crystal or some type of filament or fiber optic cables and other things that you can do in microgravity. The things that are actually, a high value finished good, when you get that back to Earth and you sell it for a very, very huge profit margin, that's what's likely to happen in space, as opposed to having a real estate platform that you sell to a tourist. A space hotel is really interesting, and it will probably happen, but it's not likely to be at the forefront of space commerce.
Even if space hotels are right around the corner, don't get too excited about booking a trip in one.
It's not a cheap ticket to ride to space, and it's going to be, millionaires and billionaires and that sort. But at the same time, the point was made that in the early days of airline trips, that was also a completely unaffordable ticket for most people. Those people who flew were people of means, and over time it becomes affordable to the masses. And I think that's the goal for all the entrepreneurs in space as well, to get those costs down to a point where it's not $10 million or $5 million or $300,000 ride into suborbital space. When it becomes more like buying a first-class ticket to go to Europe from the United States. So that's the goal, and the question is, can we get to that point?
Given the immense operating costs of getting to space, it may be years, if ever, until space tourism becomes a profitable venture for any of these companies. Virgin Galactic, the only publicly traded company of the three, has had a particularly rocky year, initially riding on the momentum of a SPAC deal, but more recently beset by launch delays and major funders, including Branson himself, selling large quantities of their stock in the company.
Space is really, really, really hard, and it's an absolute cliche, but it's one that happens to be very true. It's just really hard to do. That's also the reason that you've seen the delays that, Virgin had talked about flying years and years ago. And it became such a crazy point that Richard Branson actually stopped talking about it when he was asked, because it was never going to be when he predicted. But it's not insurmountable. And, investors have stepped up because this is something that is doable.
Despite the astronomical dangers and costs of getting to space, it may ultimately follow the course of other once fanciful modes of travel.
Wright brothers having, what was by modern standards a very unimpressive first flight, at Kitty Hawk. I mean, you had less than 20 years later, you had your first airborne ambulances being used to save lives. Fundamentally, the world is a more interesting place when people can go and dance among the stars and such.
The lure of space is innate. It's in our DNA. It's that exploration bug. We are an exploratory species, and we want to go out there and see what's out there.
That vision that I had in 1969 of seeing normal human beings travel into space, it's finally beginning to happen. When you get a bunch of people up there and they can all see it for themselves, that'll create even yet another revolution in how we treat our planet and the way we think about it.
So while 2001 came and went without quite looking like Stanley Kubrick's ultimate space fantasy, 2021 might finally be the year we're catching up.
If you visit California, you might be inclined to go to Disneyland, or jump in your convertible and take Highway 1 up the coast, or maybe make a pilgrimage to Yosemite. All very fine choices. But if you're the kind of person who revels in our planet's extremes, then it's Route 395 that you're after. This one glorious road will carry you from Death Valley's desert floor to sky-high views of Mount Whitney. You can see the 5,000-year-old bristlecone pines, the oldest living organisms. Or the bizarre tufa towers of Mono Lake. And true to California's boom and bust spirit, you can saunter around the ghost town of Bodie. What a novel experience to find an empty American city where all the businesses are shut down. To do 395 upright, it helps to have a guide, and mine is a man named Jan, and his crew, Heron,
Let's tidy up first.
and Lemmy, the hardest partying dog of all time. Jan agreed to show me some of what 395 has to offer, but only if we agreed not to disclose any locations.
My name is Jan Swirstra. I'm an industrial designer out of LA, and I spend a lot of time camping and a lot of time in the Eastern Sierra. It's a place I love, and sometimes I'm known as 395 North because my Instagram account, and I don't like to be known as that, but I'm trying to use it to set a good example and do more with it than just social media.
Where did we end up camping? We got here late last night. I wasn't even sure where we are.
This is BLM land, right on the outskirts of National Forest, and it's one of my favorite places in the world. Basically, everything outdoors wrapped into one.
Yeah. Good thing about California, man.
Oh, man. We have so much national forest and public land that you can literally just cruise out and find a place to camp. It's ours.
What I wish was mine is Jan's sweet truck.
It's a 2019 Ford Ranger. Has about 200 watts of solar in it and a fridge, and has everything that an RV has except for a toilet, but just on a smaller, simple scale.
And you drive us around day to day in LA.
Yep.
And then just roll out when you want.
It's my daily driver. Handles great. And then when I'm done with work, I can just bail and go camping. So the camper basically has only what I need. Think of it as backpacking with a car.
Yeah.
The fridge has a couple compartments. This is just a kitchen box, stove, utensils, and a bunch of stuff. This one has just dry food. Then when you get inside, there's a bed. The bed flips up, so you've got tons of room in here. This awning is phenomenal. If you want to pull that over. That's cool. Let me just pop that up.
Sorted.
So, home on wheels.
Yeah.
This is my vacation house.
Dude, it's so nice, man. Even with his nomad lifestyle, Jan faces the same big question as the rest of us. Do the internet and smartphones have to ruin everything?
When you find the super special, beautiful spots, is that you busting out a map and like looking where it might be cool to go, or is it word of mouth and just getting to know people, the locals? And
if I see a dirt road, I just want to go down it. So a lot of it's just aimless rambling. It's a desire to just see something. Check that out. For some reason, it's more fulfilling than getting a recommendation from somebody. Or there's tons of apps and websites now, road trip apps, camping apps. They've proliferated. The knowledge is accessible on the internet, right? I used to fight the geotags, and I would get really pissed off. Like, why are you posting this place? It's gonna blow up, it's gonna get trashed. Now I've realized that you can't fight it. The internet has just shrunk the world. So pooping out in the wilderness, don't leave your toilet paper on the top. You know, make sure you follow, good steps for leaving no trace.
As a thank you for this quick guide to pooping etiquette, we made Jan, Heron, and Lemmy some tacos. And we all took in the night sky and knocked back a couple of drinks. Take that, Apocalypse. The thing about good times and serenity in 2020 is that they're fleeting at best. After we split up from Jan and continued on our way, smoke started to envelop us. The plus side was that our RV no longer smelled like feet. The downside was breathing. My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and
Yeah, don't go in the valley.
yeah, no problem. We just wanted to get through.
It was a beautiful choice. Glad we got out of the smoke. Whoa, okay. But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky,
look at it.
strip malls of the Central Valley.
We have made it sort of out of the smoke all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. So we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California. Very, very large farming valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts.
Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots.
On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command.
So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor. And
you can notice of its machines.
And have you just sold them in the Central Valley or like throughout the U.S. or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019?
Yeah, so we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, and how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheaper.
Yeah, I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very, very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer. So vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello.
Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LQ.
Can I take her out for a spin?
Please.
LQ, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, But you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her.
Like,
or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LEQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LEQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. LEQ?
Yes?
Schedule a doctor's appointment.
No problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more because she understood the fact that you need to run after your dreams and work really hard no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
the principal of the school did not recommend her to take advanced classes, she fought for it, and she got into it, and she did very well with them too.
It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can't say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousy things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you? I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water, at least 4 times a day.
So, we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
Well, I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country. CPM stands for click per 1,000. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't
talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, when boring things were happening in the game, I would ramble on about, movies I'd watched or books I'd read and, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You got to make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. My first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So don't forget to smash like and subscribe and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And very good afternoon, everyone. It is Thursday, April 13th, 2023. Carol Masser along with Bloomberg Quick Take correspondent Madison Mills. As you know, Tim is on leave. We are live in our Interactive Broker studio on YouTube on Bloomberg Originals. But we've got stocks rallying, Maddie, in a big way. We're at our best levels of the session. But I got to point out we're on low volume. And it's another one of those days, bad news or weaker news is good for the equity markets.
It's so interesting to see this continued low volume, even as we get some of this soft data in. So we're going to get into
to the trade and the day's economic news in a little bit. But one stock that we're watching, shares of WW, that is company Weight Watchers, have nearly doubled this week. The CEO is going to join us to talk about the company's acquisition that has sent the stock absolutely on a tear.
Unbelievable. It's up another 11% in today's session. All right, speaking of stocks popping, so too is Amazon. Not up as much as WW, but up about 2% on a business update and a pledge from the company's CEO, Andy Jassy. We'll get into the details.
And also, Saudi's Russia-China tilt and its potential shock to the West, a big oil story there.
Want to talk some diamonds?
Oh, I would love to talk diamonds. This is going to be a fun one.
This is specifically about ethically and sustainably sourced diamonds made from the lab. We're going to speak with the head of the Berkshire Hathaway-owned Hillsberg Diamonds, the president joining us a little bit later on.
And we'll also tell you about the smallest bank in the U.S. that doesn't have an ATM or a website. This is the cutest story of all time. Yeah.
Yeah, and not a lot of employees. In fact, only one full-timer. And then we're going to get to an annual gathering. We're going to take you there of the global music, sound, and entertainment technology industries for a check on that world. That's always fun. A lot was going on during the pandemic when it comes to everybody staying home and playing music, but now we get more on the post-pandemic life. So looking forward to that. In the meantime, check on that markets. As we said, stocks near their highs. We've got yields bouncing around tight range. Once again, definitely though, I feel like a more risk-on trade. Right now, let's get to the countdown to the close.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left here in the trading session. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Madison Mills, I'm sure this time. Welcome to our audiences across Bloomberg Television, Radio Originals. And yes, Carol Masser, those folks in their cars streaming on YouTube.
There's something different. You look smarter, Romaine.
Do I?
Is there something?
Are you saying I look dumb before?
I would never say that. Well, we'll maybe get into this a little bit later on. Having said that, yeah, it feels like a risk trade on some weak economic news, giving investors kind of the green light, thinking the Fed's maybe done in terms of or getting close to it when it comes to raising interest rates. We'll get into that in just a moment. Outperformance. Check out the solar names, folks, because we are definitely seeing them on the move today. A couple of different reasons. You got HSBC initiating coverage on the group, buys on Enphase and SolarEdge. Deutsche Bank, meantime, calling Enphase the firm's top pick within solar companies, downgrading, though, First Solar to hold from buy. So take a look at the trade. Enphase up about 7% there. SolarEdge up almost 8%. First Solar, even despite what Deutsche Bank had to say, it is still up about 1.5%. And you take a look at the Invesco Solar ETF, it's up to, no surprise, up about 3.5%, Maddie.
Well, one thing I can't stop thinking about is this soft data that we're getting in. Yesterday, I pulled up a chart on how CPI and jobs were both going down. That's not great news. And then bam, today, U.S. jobless claims rose for the first time in 3 weeks. And the 4-week average, which is a little bit more important because it calms and smooths out some of that volatility, that also increased. So, Romaine, we know what this means. It could be good news for the Fed.
Yeah, certainly so. And I think the market is interpreting that as well. We talk about the reaction that we saw in the equity markets. There was strong activity in the pre-market. As soon as we got to the open, you saw a straight line up. In fact, anyone who has a Bloomberg terminal, just run a daily chart here of any of the major indices, and it is basically a stair step higher. An S&P 500 at 4,147 and change, up 1% on the day. Similar moves by the Dow Jones Industrial Average, the Russell 2000, the NASDAQ, your outperformer on the day. Tech stocks out front, up 2% on the day as a group.
It's the same story if you look at the sector level. Just a sea of green. Real estate has been going back and forth there. You can see it just dipped into the red. But leading out front, like Romaine said, I mean, it's discretionary, it's communication services, and then it's tech, all pushing this index higher. We're trading around session highs right now in the S&P 500.
Yeah, we've seen big moves in those names. Apple shares having another a great day here, up almost up more than 3% here on the day, I should say. Netflix shares, we're actually going to get those earnings, I believe, next week. Those shares higher by about 4%. In fact, they've been on almost like like a 20% run since about mid to late March here. So keep an eye on that space. Now, it's not all glory out there here. We did get earnings out of Progressive, the big insurance company. And remember, we kind of saw this the last couple of months with some other insurance companies really reporting some concerns here about not being prepared for some of the uptick they've been seeing in claims, at least in terms of valuations. Progressive shares down 6.5%, and Delta Airlines on the back foot as well, down about 0.7% here. But overall, this is a risk-on day here as markets interpret that PPI data. And then, of course, you have to look ahead to retail sales. Those numbers coming out tomorrow morning. And remember, there's been such a distortion in this because of how high inflation was. Retail sales were growing, but that's not adjusted for inflation. But with inflation now down off that 9.4, 9.5% peak, and now down at that 5% level, you're going to maybe get a little bit more of a clearer picture as to exactly how strong retail sales are.
Yeah, coming off of that weekly jobless and PPI, you do wonder if we're starting to get more warning signs when it comes to some slowness in the U.S. economy. We'll see what retail sales has to say. Having said that, the balance of risk facing the world economy remain tilted to the downside. That's the thinking of the IMF First Deputy Managing Director, Geeta Gopinath. She caught up with our Bloomberg surveillance team earlier from the nation's capital at those IMF spring meetings. Here's what she had to say specifically.
We still have tight labor markets. Consumption spending is still holding up. But that said, the balance of risks are squarely to the downside. Our expectation is that inflation will be conquered over time. It's not going to happen immediately. But if you go into 2024, you're going to see inflation around the world getting much closer to central bank targets.
All right, Geeta Gopinath, IMF First Deputy Managing Director. So there's a lot of stuff there, Katie. What?
Go ahead. I'm sorry.
Well, I'm just saying that she's pointing to, right, we still continue to see tight labor markets. We all talk about that all the time. She is sticking to that concept that globally inflation can come down. I think there's a lot of debate about that, but more of a negative tilt in terms of downside risks. So now what do you want to say?
Yeah, Romain,
Katie,
come on. No,
Katie.
I want to hear what you have to say.
I guess my whole thing is when we talk about these economic forecasts here, too, we're still talking about growth for the world globally and for most of the individual nations, at least the economies that we care about. So yes, things are slowing. Yes, there is a potential that there is a recession ahead, but I've yet to see anyone credible, including the IMF or any of the other major sort of, thinkers out there, really put a negative sign in front of some of these GDP numbers.
That's the thing, right? That we haven't gotten that explicit forecast necessarily. But again, if you weigh all the tea leaves together, all the noises coming out of perhaps some of those big thinkers that you mentioned, it all seems to be pretty negative. And then you get the data release that we got today, and somehow adds up to good news for the stock market because the Fed is going to have to take their foot off the gas.
Yeah, I mean, Romain, you talk about GDP strength, and I know that you are the foremost expert on this as our CFA member on this panel. Congratulations.
When are we going to get to
That's
that?
That's why you look smarter.
I mean, when are we adding it to the namer? When are we adding it to the namer? But I mean, in all seriousness.
Well, don't get me in trouble now. You're not going to violate me before you even get my charter. I still have to get my charter here. I passed level 3, so if anyone from the CFA Institute is watching, violate Madison Mills, not me.
I can't wait to see this. Yeah, listen.
Violate
we love it. Congratulations, Romain.
Thank
and
you.
you're
I really
always smart and always
and
a
this
little
just
annoying.
now gives me, now that that's over, a lot more free time to needle Carol Massey.
Can't wait. And we will hear more of that in less than an hour's time. We're going to come back. Our cross-platform coverage.
So well.
I do. We're going to count you down to the close on this Thursday. Come back to us Beyond the Bell at 4 p.m. Wall Street time.
All my ladies, pop your backs with it, drop with it, lean with it, rock with it, snap with it.
All right, everybody, we've just been talking a little bit about the markets and some of the stocks on the move. And once again, we're seeing shares of WW International rally another 11.5% as we speak, up more than 22% earlier in this session. But keep in mind, this is a stock that has almost doubled in the week alone, all largely on the news of the company's plan and then this week closing of its acquisition of a telehealth provider that will help it access the growing market for new obesity drugs. We knew we wanted to hear more, so we wanted to go straight to the source. Joining us is the CEO of WW, Sima Sistani. She is co-founder and former CEO of also the social platform House Party, took off during the pandemic. She was also a senior leader at Epic Games. Sima, it is so nice to have you here with us. Great to be talking with you. How are you?
I'm great. Thank you. It's nice to be here, too.
There's a lot going on, a lot of conversations, and certainly within the analyst community and even in our newsroom about what you are doing at the company. Stock, as we said, has been on a tear. You completed the acquisition of Sequence, the telehealth provider. It sounds like you're getting into the weight loss drug business. Why? Why are you?
Look, we're in the midst of an evolving landscape in how the medical community and many consumers view obesity and overweight. I believe that the zeitgeist is changing, and more people are now recognizing obesity as a chronic condition, understanding its causes, including not just behavior, but also biology. And there's an increasing openness to clinical interventions to help. And we have a next generation of medications that is really game-changing. And so when I joined over a year ago, I guess just over a year ago, we started talking about, yes, thank you. We started talking about the possibility of building or buying around new modalities, and it was clear that these medications were going to be a paradigm shift in our industry. So it was really a no-brainer to enter the space.
So I guess what we're all wondering then is what's the relationship between the Weight Watchers core business as we've all known it and then the telemedicine medicine company, that you're acquiring? Is it a case of thinking about current WW members getting onto weight loss drugs, or that the telemedicine company ultimately will help you attract more WW customers? How does it kind of work, or how do you see it working out? Or both, perhaps?
Yeah, so let me take a step back. When we evaluated the space, we looked at over 30 different startups, and it's mostly startups that are in this landscape. And we landed on Sequence because they have built a tech stack better than anyone else. This is these medications are really expensive, and Sequence has built out a pre-authorization engine, so essentially putting the insurance process on tech rails. And we thought that was unique and great IP and would allow us the ability to scale. In addition to that, they have a really delightful user experience. It is a subscription business where you're essentially signing up for the care team model. These are complicated medications. It's not like getting an ED script where you can just take a pill and close your eyes. You have to titrate the dosage along your weight loss journey, and there's a lot of different symptoms to manage. And so Sequence has a care team model. It's like having the clinician, a fitness instructor, a nutritionist all in your pocket, like in a WhatsApp. And then on the other side is the clinician platform, which had a really high NPS and in the ability for clinicians to feel that they had the appropriate tools to help the members. So between that and the right sort of values and alignment, we thought, okay, this is a business that will help us achieve our overall mission, which, our mission is we are currently the global leader in weight loss management. We want to continue to be that and connect people through healthy habits, no matter which pathway they choose, whether it's through behavior change, whether it's through clinical, and potentially functional as well. And so therefore, the Sequence was a great match for us to be able to provide our members, and new members any option along the way. But I think the biggest clarification in this is I've heard a lot of misinformation about, this is a pivot, but that's not it. This is an and. These medications are all delivered alongside a behavior change program.
Well, Seema, I just want to pick up on that because it's such an important point, and I hate to interrupt, but I am curious about, you talk about the importance of this not being viewed as a pivot, but as you, I'm sure, are incredibly familiar, there is a bit of a controversy around Ozempic. So I'm curious if you can share with us and our listeners, what is your criteria around prescribing it? Because there are a lot of people who might fit the BMI minimum, but they may not have the underlying health conditions as well. So what is your definition of who should be taking it? Yeah.
Thank you for that question. So going back to the Sequence being the right values and alignment, you need to prescribe these medications only when medically appropriate, which means that you have a BMI of 27 or higher with a weight-related condition, or BMI of 30 or higher. And even in that case, there might be other reasons why it's not medically appropriate. And if the clinician, who we do not employ, by the way. I think that it's important for us to have that separation. If we don't make any money on the prescription itself, if the clinician determines it is medically appropriate, that's where our subscription model comes into play, where we actually, provide the support system in addition to trying to help the member get the medication insured.
So Seema, I know you mentioned you don't make money off of it, but when you're thinking about your customer base as a CEO, are you thinking that the majority of the new customers you're going to get off of this deal are going to be people who are interested specifically in Ozempic?
No, I think that they come, first of all, there's a wide range of medications that are entering the space. The only ones right now that are actually on label for weight loss is Wegovy and Saxenda. There are some generics as well. They're just not the GLP-1s that people are speaking to. And then obviously Ozempic off label, when again, the clinician has deemed it appropriate. I think that people are looking for clinical intervention, and the benefit of the combination with Weight Watchers is when it is not medically appropriate, then we have a way to push those members to Weight Watchers and vice versa. If somebody is coming to Weight Watchers, is above the BMI threshold and is interested in a medical intervention, then we can point them to Sequence.
So what do you think it does ultimately to, Seema, a key metric for your company has always been the subscriber base, which has been, shrinking in recent years. We did see a pop certainly online during the pandemic, but the in-person meetings, have also come down. What do you think this collaboration, this acquisition will do in terms of that subscriber base? Do you have any thoughts in terms of projections there?
Well, I can't speak to that today. We'll report our Q1 results in early May. I can say that on March 6th earnings call, we said we expected to end Q1 with 4 million subscribers.
Okay, but I would assume, I know you can't maybe talk about, you would assume that you're going to be able to tap into, the acquisition in terms of its access, and that it will grow your subscriber base.
Well, I think that part of the reason that, we think that this acquisition made sense is around the CAC efficiencies that we can achieve. The Sequence business, when we acquired it, had 24,000 active members, and that was without any paid marketing. So you could imagine that there is a real opportunity when a business like ours is investing a lot in paid marketing to basically to create CAC efficiencies. Also, we have a B2B side of our business,
right?
Where we are partnering with employers to provide Weight Watchers, and so there are ways for us to help increase access around these medications, certainly.
And I appreciate that. And the reason I ask is there's a lot of analysts writing about it, talking about how much your subscriber base could increase, or as a result of this, now that there's maybe 6 million or 11 million, I'm hearing a lot of numbers out there, so just trying to get a feel.
It's still a very small population who is actually able to access, and I think that's a bigger conversation that we need to be having, and that the sort of the clickbait nature of these medications has unlocked an opportunity for us to have the important conversation, which is around chronic weight management treatments for people living with obesity. And there's a lot of stigma still associated with these as quote-unquote weight loss drugs. And we're losing the underlying critical importance that these are medications for people living with a chronic disease.
Well, to your point on that, Seema, I know that you're also familiar with the fact that there are shortages of Ozempic, specifically for people with diabetes who are using it. Can you talk a little bit about your thinking around, promoting Ozempic, given that we are dealing with those shortages as well?
So there are a couple of things. One is that the Novo Nordisk has come out and said that there are no longer any supply chain issues with Ozempic. Secondly, is we're not promoting Ozempic. We are promoting access to a clinical intervention. Now, what the clinician actually prescribes is a different question. But I think even in that question, it lies a little bit of the concern of, are we pitting people with diabetes versus people who are living with overweight and obesity? And would we be saying the same thing if these were medications for people with cancer or for people with heart disease? Because guess what? Obesity is the leading cause of both of those things. So I think that's the conversation, is to really have us level up how we perceive overweight and obesity in our society.
All right, we're going to leave it there. Seema, thank you so much. I feel like a very smart interview in terms of answering a lot of the questions that are out there about this. Seema Sistani, she is CEO of WW.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We check markets all day long here at Bloomberg. Straight line up from left to right. It is the best level of the day right now on the S&P 500 index. Right to the numbers, we're looking at a gain of 57 points in the S&P, higher now by 1.4%, extending its year-to-date gain for the S&P to 8.1%. The Dow up 403 right now, up by 1.2%. NASDAQ up 247. That is a gain of 2.1%. 10-year yield 3.45%. We've got the 2-year yielding 3.97%. Latest readings on jobs and inflation slightly softer than expected. More on the economy, more on the Fed coming up in just a moment with our Reed Pickert and Bloomberg News economics reporter Steve Matthews. Spot gold up at $23 the ounce, up 1.2%. West Texas Intermediate crude down 1.1%, $82.30 a barrel. Well, as for the oil backdrop and demand from Asia, Amrita Sen is Director of Research at Energy Aspects.
I think the reality is commodity prices, particularly oil, given the OPEC Plus cuts together with China's reopening, will mean potentially much tighter markets in the second half of the year, as long as, there's a mild recession in the West and it's not like 08-09, which is not our expectation.
And the oil stocks I like to follow, they are all higher right now. ExxonMobil up 0.5%. BP, its ADR is up 0.7. Chevron up 1.5%. EOG Resources up 0.1%. Pioneer Natural up 1.8%. ConocoPhillips up by 2%. Recapping, S&P up 55, up 1.4%. Your 10-year, 3.45%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week. Carol Massar along with Madison Mills. And we touched on this with our TV colleagues, kind of the data dump, if you will, of economic news. U.S. producer prices falling in March by the most since the start of the pandemic, driven by a decline in gasoline costs that really has helped slow inflationary pressure. So that's a big thing. And then you also had applications for U.S. Unemployment benefits rising for the first time in 3 weeks, largely due to a jump in California and maybe suggesting some more softening in the labor market, which is why, Maddie, we are definitely seeing this rally underway in the equity markets. The expectations, Fed getting it nearer to its rate heightening cycle.
Yeah, it is such a, every day it's like data that's good news, bad news for both the Fed and the markets. It's a lot to make sense of. So our economy and Fed roundup on this Thursday, we are going to have on Bloomberg News U.S. economy reporter Reed Pickert. She is on the phone with us from D.C., along with Bloomberg News economics reporter and Fed watcher Steve Matthews on camera with us in our Atlanta bureau. Reed, let's kick it off with you. PPI. Are we heading in the right direction? They fell in March by the most since the start of the pandemic. Is that as good as it sounds?
It is good, but perhaps not as good as it sounds. It's a very similar picture to what we saw with CPI yesterday, where you saw that these headline inflationary pressures are on a downward trend, but energy certainly flattered that by seeing a decline in gasoline prices. But kind of underneath the surface there, you still saw that even when you stripped out some of the most volatile components, you still saw the PPI rise by less than expected. And even kind of looking a little bit further in the details, where we do see some of a kind of a similar picture to what we saw with CPI is around some of that service stickiness. Several of the categories in PPI feed into the closely watched PCE metric and the kind of super core metric that folks talk about in terms of watching for, that Powell has pointed out, and some of those continue to show increasing prices.
So, Steve Matthews, are we kind of getting to the point in the cycle where, okay, inflation, yep, we know it's sticky, and some of these components are the tougher ones to get down more substantially?
Good question.
Yeah, I think that's exactly right. Carol, the Fed has been saying, and Chair Powell has been saying, the disinflation is going to be bumpy. It's not going to happen in a straight line. And while this month, is proving to be pretty good, better than expected, it's entirely plausible that next month there'll be a setback. So it's certainly not going to be an easy path back to the 2% inflation target.
And are we still sticking to 2%? I know that the answer is yes, but really, Steve?
They say so, and they say it so emphatically that it's really hard not to believe them. I think that is the plan. Maybe somewhere out there in the future they would reconsider the target, but I think that the thinking is if they thought about a different target now, that would ruin their credibility. And, you know, if they change the target, say, to 3% now, why would you take that seriously? Why would you not think they could change it to 4%? Or so it's like, I think they've kind of dug in their heels.
Well, they're not alone. Gita Gopinath, we just played some sound over the IMF. She's talking about, you know, global inflationary levels getting down to normal, maybe not this year, but maybe 2024. Having said that, Reed, you know, when we look at, you know, I think Steve brings up a really, really good point, and we all kind of joke about it, maybe on air, off air, but, you know, the Fed's going to do what it's going to do when it looks at the data points that are right in front, what's current, what's the environment, what do the banks say? I mean, what's happening as they get together in that meeting on May, Reed, and that's what will ultimately determine their decision.
Absolutely. And I think, you know, really the question here, I mean, inflation at some point will come down, and the Federal Reserve is going to make sure that happens. I mean, the real question is kind of between point A and point B, whether we have recession as Fed staff forecast or whether we don't. So it'll be interesting to watch the data on a weekly and a monthly basis to see if the loss of momentum that we're starting to see in the economy worsens into more of a downturn, or if the economy can hold up.
Well, and you know what's kind of interesting, guys, is that we've had some data points, like as we go along in this process, that they're not always showing, you know, one clear direction here, if you will. And what's interesting, Steve, and come on back in, is just some of the divergence we've seen in some of the Fed speak this week.
Yeah, you have totally nailed it, Carol, because there has been a subtle shift in the Fed speak this week. For the first time, you're starting to see some of the ardent doves come out and basically push the idea of a pause. You heard Mary Daly say, maybe we don't need to hike again in May. You had Austin Goolsbee say, basically, this is a time for patience and prudence. And you had the head of the Philadelphia Fed, Pat Harker, say basically, we don't want to go up, 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 and then go whoosh, and then have to go down, down, down. So it's like the tone has changed a bit. I mean, some of it is just the people who've been speaking this week are a little bit more dovish than average. But even beyond that, there's definitely a tone seeping in there that, you know, maybe it's time to consider a pause. And I think it's going to be a closer call in May than people expect. I mean, the markets have, you know, a heavy percentage put on there being a hike in May, but it's entirely possible that that doesn't happen.
Well, Reed, I know you look at the data so closely, and you are our go-to person for everything on the data side. I wonder what the data we've gotten in the past 2 days tells us about that potential PCE print that we're going to get. Are there any indications going into that PCE print that we might have gotten over the past 2 days?
Well, the best indication would probably be from today's report, just because some of those PPI figures do kind of go directly into the calculation of some of those PCE figures. And I think what we learned, both by kind of looking at some of these healthcare components in today's report, as well as airfares, is that kind of the same stickiness that we've been talking about in the service sector is still going to be there in the PCE. Whether it will be there as kind of firmly as it was in CPI, or whether we'll start to see a little bit of a step back, I'm not quite sure, and I'm not sure economists are quite sure either. But certainly that stickiness will still be there. One thing that I will note that is interesting about the data that we've seen in the past 2 days too is with regard to jobless claims, and I think, you know, they did increase, and I think that's worth noting. But it was interesting given the fact that it was all largely from California. It really kind of is starting to see some of those job cuts that we've been hearing about for months now, and we're finally starting to see some of those in the data. So it'll be interesting to see kind of as we move forward whether kind of those have largely moved through the system and are now reflected in jobless claims, or if we're really going to start to see more of a deterioration there as well.
All right, Steve Matthews, as you read the Fed tea leaves ahead of that May meeting, we're just, you know, a few weeks away, if you will. The Fed, if you had to prioritize what's going on with the bank community, what's going on with inflation data, what's going on with growth data or labor data, what would you say is top of mind for the Fed right now?
watch the banks. You're going to get bank earnings reports, from the big banks and from some of the regional banks. You're going to have information about what deposit outflows were. You're going to get some information from the Fed on what's happening with lending. The Fed is really worried about, a credit crunch, and the banking turmoil is going to have a greater impact than they expect. And so, you had the major reports, CPI and employment, and there really aren't too many major reports left. I think it's all going to depend on the banks and what you see happening there.
Yeah, I agree with you. If there's any concerns or nervousness or any possible bad news or any other collapses or really a tightening of credit and seize up of credit, that's going to be hard for the Fed to ignore it. Steve Matthews, economics reporter at Bloomberg News, and Reed Pickard, U.S. economy reporter at Bloomberg News, Reed in D.C., and of course Steve in our Atlanta bureau. All right, let's get back to world and national news. Nancy Lyons, she too in our D.C. bureau. Hey, Nance.
Thanks, Carol. A suspect is in custody in connection with the leak of Pentagon documents. Attorney General Merrick Garland here.
Today, the Justice Department arrested Jack Douglas Teixeira in connection with an investigation into alleged unauthorized removal, retention, and transmission of classified national defense information.
Merrick Garland says the suspect, Teixeira, works for the Massachusetts Air National Guard's intelligence arm. Garland says he'll be charged with unauthorized removal, retention, and transmission of classified national defense information. Donald Trump is back in Lower Manhattan, being deposed for a second time as part of New York State's $250 million civil lawsuit.
It's unclear how long the deposition will take or whether Trump will answer any questions, though the former president's lawyer suggested her client would have something to say. Trump is accused of manipulating the value of his assets for years to dupe banks and insurers. It's his second trip to New York in less than 2 weeks. He appeared in court on April 4th to plead not guilty in a criminal case. Trump is charged with falsifying business records to hide a hush money payment to a porn star. Jill Schneider, Bloomberg Radio.
Justin Pearson has been sworn in and is back at his old job as Tennessee delegate. He was one of 2 black Tennessee lawmakers who were expelled by the legislature last week for violating floor rules after using a bullhorn to push for tougher gun control. He spoke shortly after his swearing in this morning.
They work to expel our constituents' representation by subverting our democracy for their mobocracy, where their dollars and their egos rule.
Pearson's fellow activist, Justin Jones, has also been reinstated to his old job in the Tennessee House. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ continue to push higher. Stocks are holding close to session highs. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a strong bid today, with the Dow currently up 379 points. S&P's gained 54, and NASDAQ is higher by 2%. The U.S. 10-year yield at 3.45%. Gold is up 23. Energy is in the red. And Bitcoin is higher by 1.5%. Of the main 11 S&P sectors, leaders were telecom and consumer discretionary. Only real estate fell. And leaders to the upside in the Dow, Apple, Disney, and Nike. Fractional losses for IBM and Travelers. After earnings, Delta reversed early gains to drop as much as 3.9%. And in other news, Amazon CEO said that Amazon Web Services has a chance for unusual growth in the next decade. And Western Digital dropped intraday on a report that hackers are seeking a ransom after stealing data. Wrapping things up, banks report tomorrow in the pre-market with earnings from Wells Fargo, JP Morgan, and Citigroup. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much. Bill Maloney will be all over those bank earnings as they break. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session, and we've got a rally underway. Thin volume, and it's been in kind of an interesting trade, I feel like, for the last couple of weeks, because we've seen some tight ranges on both the equity and treasury trade. But let's see what our next guest has to say following some soft economic data earlier today and what it means in terms of investment strategy. Back with us, it's been a while, Hillary Kramer, Chief Investment Officer at Kramer Capital Research, author of Game Changer Investing and How to Profit from Tomorrow's Billion-Dollar Trends. She's here in our Bloomberg Interactive Brokers studio. It's been a while. How are you?
Carol, I'm fine. Thank you.
Managing through like the crazy world of life, the news and everything. It is good to see you again. This market environment is an interesting one, and I feel like every day, potentially, we can have a different conversation based on the Fed speak, the economic data points, just the news flow. Who'd have thought that we'd be talking bank collapses in 2023, but here we are. But it does feel like things have calmed down, and now we're ready for an earnings season. Is this a good market to invest in?
This is a good market right where we are now because there's been so much fear about potential banking collapse, but it is not a Lehman moment. And we will see very soon tomorrow with JP Morgan, Citigroup, Wells Fargo. They have been these banks have been preparing their numbers, and I don't think we're going to have any downside surprises, only upside surprises. We might see some softness in the guidance towards actual loans and credit because these banks have to be careful,
right?
And the banks have to be so careful. We're seeing, what did we see? Year over year, a 74% decline in apartment building sales. That's really a bad indication.
So rents are up
where we
so
are.
much in Manhattan. We just had a story, right? Was the average, according to Miller Samuel, I think over $4,000. I was like kind of blown away by it.
Yeah, no, just absolutely insane. But so then for you would see that as a more scary indicator than the bank earnings?
Absolutely, because the banks know how to manage. They made it through, the ones that made it through 2008, 2009, they're not going to make the same mistakes. They really think about it. It's the regional banks. It's banks that
they kind of almost can't, right? Because of the rules and regulations that they have to abide by.
Exactly. Whereas the other ones, like SVB, were able to play, loose and fast, and between depositors and what they were investing in, on the long side versus the short side, it makes a lot of sense what happened there. But the Fed came in, saved the day.
Where do you want to be investing right now, though? If you said,
I would be investing in some of the companies that are still off of their highs. For example, I think Lowe's still makes a lot of sense. I actually like Disney at 100. Many people disagree with me, especially about subscription fatigue, but the prices are being paid at the level, in terms of Disney, and I think that we're going to see Disney go from 100 back to maybe 120 to 125 there.
Because of the streaming service? That's the catalyst or the play or what?
It really has to do with the prices that people are willing to pay, not for the streaming services. There's no
At the
really
parks
good news
and
there.
elsewhere, or
Oh, yeah,
what?
absolutely. It's about the parks themselves. Yeah, so, and also, money has to go somewhere, so it makes sense to go into companies like Disney, like Lowe's. I still think that Goldman Sachs.
Would you
even
still like Disney if Bob Chapek were still there?
No, no way. No. He needed to
so
go.
So Disney.
Yes.
So Iger coming back, a catalyst for you.
And not coming back temporarily, but coming back and saying, like, I'm coming back to my office, with the pictures of my family, and I'm going to make a difference here and make things look a lot better. But I do think the S&P 500 could run up to 4,200. We're at 4,150 right now. I think that this tug of war, we have to just keep thinking about that. And when we have phenomenal days like this, Carol, this is what you're really referred to.
Why is this phenomenal? Because to be fair, the volume is thin. It's been thin for a while, especially on some of these uptick days. I don't know that I would call that phenomenal.
It's phenomenal in the sense that we're walking into earnings season and so much concern and uncertainty, and yet we're seeing the market really rally. I mean, look at the message today at Amazon. There's real concern on AWS, which is the web services, which is always like their gold star, gold chip, platinum, driver of revenue, and now all of a sudden they're offering discounts out there, and yet the stock is rallying. So I think money, when you have good news, you have all the algorithms, they start to load into the market, and it creates this euphoria. But this is the tug of war. When you have days like this is what works against us, because then credit is kind of loose again. Everyone starts piling into the risky trades, and that's why we have this back and forth. But anyone who's looking to invest in the market, this certainly is not a bad time to be in the market. There's opportunity in energy, for example. There's opportunity in some of the more beaten down stocks. And there's 2 IPOs that got out there this year that are phenomenal.
Stop for a second. So Lowe's you like?
I like Lowe's.
Disney you like?
I like Disney. I always talk Goldman Sachs to everyone to be safe. It's really best
Even
of breed.
with all the outflows, you still like Goldman?
Totally, because Goldman knows how to make money. They have the balance sheet to go in there and to be a dumpster diver, I call it, right? And to sit and hold, what's in the dumpster, which is going to be gold soon enough. And I think that they're smart enough to turn it around, and they have a good international franchise, and M&A is going to really start heating up, cross-border M&A in energy and a lot of the industrials.
Can I ask you about Chewy?
Yes.
Which is something you loved for a long time. It's down about 6% so far this year. I still use it, certainly, but it's been kind of a different story, it feels like.
For me, it was really one that I was very proud to get people in early, to talk about it, and to be really a shepherd of the Chewy trade and being in it.
But I think
right now, I think the money has really flowed out of Chewy, even though they have such, on a consumer level, right? On a day-to-day level, we all use Chewy, but it's not necessarily one to be in. I think you're a lot better off in even something like U.S. Bank Corp with a 5.45% dividend yield. I do like these big banks, because everyone fled the banks, and there are so many that haven't extended themselves with credit, or they're not overwhelmed with commercial real estate. So that's really where you want to be, and then we're going to see what happens with the Fed, because
commercial real estate. Are you buying into that space?
No. I'm looking for the banks that are not in commercial real estate.
Without
the banks
exposure.
that do, yes, absolutely.
Okay, so bank earnings tomorrow, not that important to you then? You're still...
I think we're going to be fine with bank earnings. I think we're going to be fine. It's really more technology that we're going to be watching closely, because if the Federal Reserve doesn't start cutting rates, and if they do more than a 25 basis point raise, it's just pure finance 101. We're going to see the tech stocks start to fall again. Yeah. But there's always new stocks out there. There's always new companies.
There's always something to buy and sell.
Always.
All right, we got to run. Good to see you again. Hillary Kramer is Chief Investment Officer, Kramer Capital Research, here in our Bloomberg Interactive Broker studio. Folks, we have just about 10 minutes left in today's trading session. A rally underway, thin volume, but we're going to break it down for you. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Delta Airlines shares, they are lower now by 1.3%. Delta sees profit this quarter, though, topping Wall Street estimates. And with more on that story, here's Bloomberg's Kimberly Adams.
Charlie, Delta got a lift from steady bookings heading into the crucial summer travel season, even as it posted weaker than expected results for the first months of the year. CEO Ed Bastian says revenue and average fares continue to grow, even if the pace of demand across the industry has moderated from a recent post-pandemic surge. The carrier forecasts that second quarter revenue will climb as much as 17% from the same period a year ago. Investors are watching for any signs of waning demand, particularly in April and May, before summer leisure travel demand kicks in as consumers face high prices and threats of recession. Charlie?
And that's Kimberly Adams reporting. Again, we've got Delta shares down 1.3%. Other airline stocks also lower today. The one exception, UAL, up now by 1.1%, but American down by 0.6%, and Southwest Airlines down 0.1%, as is JetBlue, also down by 0.1%. Amazon CEO Andy Jassy is pledging to keep investing in big long-term bets despite cost cuts and an uncertain economy, moving ahead with a global expansion and efforts to become a bigger player in groceries and healthcare. Right now, we've got Amazon surging by 4.6%. ExxonMobil CEO Darren Wood's compensation rose 52% 2% to $35.9 million in 2022. And those are the company stories we're following this hour. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we have just under 5 minutes left in today's trading session. We've been talking about it. As you know, a rally underway. Equities just off their best levels of the session. Some real strong outperformance when it comes to those tech names. The NASDAQ specifically up 1.9%. Two-year note, want to know what's going on? 3.9%, so we're below 4% on that weaker, or I should say at least the PPI report that showed, again, moderating signs of inflation. The jobless, weekly jobless also showing some weakness, or at least coming in a little bit softer. So add it all up, everybody's wondering, oh my God, is the Fed almost done raising rates?
Well, and the one thing that I also was thinking when our last guest was talking about the tech rally and how that might have some potential downside is like, with these upcoming tech earnings, are their profits and the numbers that they report going to be enough to support that rally, or are people so excited about potential Fed cuts that they're going to kind of forgive companies for less than ideal earnings? I don't know.
Yeah, I don't know. I think it depends in terms of the tone and tenor, and if they're bringing down forecasts, worried about a recession, because I think at some point we hit a recession. I don't know. Maybe that's not a given, but it does seem like there's a lot of momentum potentially for that. And Fed policy, it's hard for them to get it exactly right to engineer a soft landing. Having said that, I do want to get to a story by Jennifer Epstein. Maddie and I touching upon it with Hillary Kramer in the last segment about Manhattan rents reaching a record high with the busy season yet to come. So we're talking about the median on new leases rising to $4,000. $4,175 in March, even as apartment hunters got more listings to choose from. This is coming from the appraiser Miller Samuel and brokerage Douglas Elliman Real Estate. First of all, when we talk about Manhattan rental rates, everybody's always like, isn't that a mortgage, or isn't that two mortgages?
I know.
If you go to somewhere else in the country,
and it is. But I mean, this is what we choose to do when we live here. And to be fair, like the salaries are supposed to be higher in the city, whatever, to make up for the high rent prices. But it has gotten just so insane out there. Like I so feel for my friends who are looking for new apartments, because it's always just an absolute nightmare.
And some of it's supply demand, and some of it is if people can't buy because of higher mortgage rates, they tend to rent more, and so that plays into the supply demand metrics. But as they say, busy season yet to come, so maybe watch for those numbers to go up. Speaking of numbers going up, the equity markets pretty much hovering at their best levels of the session. Let's head over to our TV colleagues. Let's count you down to the close. Beyond the Bell starts right now.
Go over here as we move closer to these closing bells. Full market coverage, as always, right here on Bloomberg Television as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser and Maddie Mills. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. A risk-on day. All the major indices holding on to pretty strong gains. Big tech out in front. You mentioned it earlier, Carol. Solar stocks getting the bid. Pretty much everything out there. You have a few down spots here, but pretty much everything right now getting attention.
Yeah, that's fair. And I think what's interesting is bank stocks. We know we get the big bank earnings. They start underway and kicking off kind of officially earnings season. But what's interesting is the KBW Bank Index. Yeah, it's up, but not up as much as we're seeing in terms of gains in the S&P, Dow, and NASDAQ. It's up about 0.75 percentage point. So maybe investors just kind of waiting to see what we get tomorrow.
Yeah, and on the banking story, Carol, we've been talking about this all week, but the key thing to look at, even for the Fed, our Fed guy, Steve Matthews, said this to us earlier in our show, we got to look at those outflows and those deposit numbers tomorrow. That's going to be so critical to suss out what the Fed's going to do.
Absolutely. I mean, that's what investors are going to be focused on, sort of the flow of deposits, whether they're moving into money market funds, whether they're raising the rates on those accounts. All of that is obviously going to be heavily in focus.
Well, we should point out we did get the Investment Company Institute data for the last week. Of course, this is through the week ending April 12th here. And of course, assets in the money markets continue to flow in pretty strongly here. Basically about $8 billion from the retail side, and institutional money was over $22 billion in that most recent week. Let's turn back to the equity markets here as we do get the closing bell in New York, and finally a day where the folks really do have a reason to clap and cheer. A Dow Jones Industrial Average higher by almost 400 points on the day. That amounts to an increase of about 1.4%. It looks like it's going to close right around that 34,000 level. The S&P 500 up by more than 50 points or 1.3%, right around 4,140 and change as we wait for the numbers to settle. The NASDAQ Composite higher by more than 200 points or 2% on the day. And the Russell 2000 not missing out on the action, higher by about 23 points or 1.3%.
Yeah, and check out the VIX, everybody. Down about 1.25 points. We're talking at 1784. It's just fascinating to see just the complacency and the ease, if you will, when it comes to looking at the VIX specifically. Having said that, maybe it makes sense, Katie, because you look at, as Romaine mentioned, so many names higher in today's session.
And you saw that on the industry group level as well. Definitely more green than red. And what's interesting, you look at what's at the top, it's your tech names, tech, hardware, and equipment. That name was all the way down at the bottom the past few days or so. Now it's all the way at the top, up nearly 3% today alone. Retail also getting a bid, as to are those media and entertainment names. You look at still what didn't do too well today. There's only 2 of them that ended up in the red, but real estate and insurance companies, Carol, today falling by 4 to 0.5%.
A lot of green there on the screen, so easy for me, I guess. A lot of individual gainers to play with, but Romaine mentioned it, I mentioned it earlier, the solar companies, really some outperformance in today's session. Topping the S&P 500 and NASDAQ 100, Enphase Energy up just shy of 7% in today's session. HSBC initiating coverage with a buy, price target of 271, stock closing at 209 and change, so they're looking for some significant upside. Deutsche Bank also initiating a short-term catalyst buy view on the company, calling it the firm's top pick with solar companies. So, yeah, the street liked that name today. Netflix up about 4.6%, also a top gainer among the names in the S&P and NASDAQ 100. Not a clear catalyst, so it's interesting, but we'll get ready for when that company certainly reports earnings shortly. Not today, but it's coming, everybody. And then LVMH, the stock up about 3.6%.
That's an old call. You think it's really coming? By the way, it is on the 18th
in a world
of April. So we like to be precise here, Carol Massey.
Thank you, though, for that precision. It's like you passed your a test or something, and you're like, we'll get to it. We'll get to it. All right, LVMH sales soaring as Chinese shoppers bounce back from some of the world's strictest lockdowns. You know the story there. Organic sales of the group's biggest unit, which sells fashion and leather, up 18% in the first quarter. So
what I thought was interesting about the LVMH, I mean, everyone's
market
focused. Well, no, everyone's focused on China, but sales in Japan were up like 30-something%. Sales in Europe as well. So it's not just the Chinese buyers. Everyone's out there buying.
Everyone but the U.S.
Everyone but the U.S.
But you've been shopping, right? Like Louis Vuitton.
I'm not much of a.
Oh, big time.
Oh, come on. We see the luggage when you travel. You can be real with us. We love you. We love you. All right, Maddie, what do you got?
I mean, you deserve all of the luxury travel gear, Romaine. But let's talk about some, I mean, you're going to need it for Delta coming up this summer. Summer bookings strong,
nice.
Thank you, Katie. Reversing last quarter's performance a little bit. They're offloading their cargo operations. Other airlines did that post-COVID, took Delta a little bit longer. They might have that catching up to them a little bit. And then we've got Progressive. We've been talking about this all day. Falls by as much as 8.2% earlier today, now down on the close about 6.7%. That is the most on the day in 6 months after the insurance company reported results for March in the first quarter, in which the combined ratio increased. And then we've got REI, that's Ring Energy Inc., slipping as much as 7.7 on the day, closing at a little over 8% after the oil and gas company announced an exercise and price reduction of nearly all of its outstanding warrants.
Let's take a look at the Treasury market, because there were some interesting moves there today here. Earlier in the day, we were talking about a 2-day sell-off kind of flipping to 2 days of buying, but that actually came to a halt here. There were a lot of oscillations and a lot of volume right around 3 p.m. Eastern time in the Treasury space, particularly on the short end of the curve. So we were looking at a day where we were actually seeing yields go down, but they actually finished the day higher. Keep a look on your screen, 3.966 right now on a 2-year yield. That's only up fractionally here, but when you consider that we were down around 3.89 at one point on the day.
How do you make sense of that?
I mean, that's the big question mark here, something that as soon as I get off air, going to have to dig into it. But you saw that pretty much across the curve, and it gets to the idea, though, Carol, and we've been talking about this idea that there is a little bit of divergence in what bond market investors are seeing and what equity market investors are seeing, and you kind of wonder, A, do they need to reconcile that, or are they just going to go on their own own merry way.
You know, we talked with Steve Matthews earlier, who covers the Fed too for us here at Bloomberg, and he said, you know, some of it too, you know, you see divergence in what the Fed speakers are saying to some extent. So I think it's kind of all over the place, and investors trying to figure out, maybe just depending on the day. But I just think it's interesting that we finished off our lows here on the when it comes to yields in the Treasury.
Yeah, and maybe they quibble in their spoken commentary, but the fact that, I mean, if you look at Powell's tenure as Fed chief, there's been very, very few dissents when it comes to actual votes. I find that really interesting. Definitely something.
I feel like that has to change over the next couple of meetings.
You know, but you think about the past 3 years we've had getting through the pandemic with almost very few dissenting votes. I mean, it's really a feat, and it speaks to how united this Federal Reserve has been. When it comes to the bond market specifically and that disconnect that we have with the equity market, I don't know if this week got us any closer to being on the same page, because, I mean, you still have the 2-year yield below 4%, pricing in, I don't know, perhaps a recession, at least a Fed that's going to have to cut. And at the same time, you have the equity market marrying.
That's what I don't understand, because everyone says, oh, well, the equity market's rally because they think the Fed will cut. If the Fed has to cut, doesn't that mean economic conditions would be weak?
It depends. Like if you get that soft landing, right, where maybe growth, maybe we don't have a recession, but it just slows down and maybe it feels not so great. But if you don't maybe officially have a recession, maybe we don't have a lot of layoffs. Maybe we do have a slowdown, right? We've talked about this. Could we have a relatively strong job market and yet have an economic slowdown?
It's certainly possible here. I do want to push ahead a little bit. We get the more economic data tomorrow with retail sales, and you kind of alluded to it, though. This is really about the big onslaught of earnings that we're about to get tomorrow, including from Citigroup, Wells Fargo. And then also, don't forget, I think United Health is in there as well, so not just the banks.
Not just the banks, but of course, all the focus will be on the banks, especially after the past month that we've had, like Maddie said, a lot of focus on deposits, but also a lot of focus on what the executives have to say about the state of the economy, the state of the consumer, whether or not they're loaning to that consumer.
It's really not about the numbers so much as about what the commentary.
Yeah, the context, right? Like what kind of loan origination are we seeing? What kind of credit pressures are we seeing? We talked with Sri Natarajan about the banks that all helped out First Republic. You know, what's the result of them having to raise their loan losses? Just trying to get some context around the banking sector, not just the big banks, but really more broadly.
Yeah, I just think that credit tightening story, we can't talk about it enough, and that is going to be, I mean, I know retail sales, it's really important, and I love a consumer angle, guys, but I just feel like those bank earnings tomorrow are going to be so critical.
Romaine, can we talk a little bit more about your
about
accomplishment?
Louis Vuitton?
I love it.
Yeah.
Are you going to go shopping at LVMH as a result?
Well, I'm just trying now to convince Katie to give up her social life for about 3 years and follow my lead. So
3 years if I pass everything at the first try, right?
Yeah.
This is a
which I didn't. We should just point
I know.
that out.
I asked her.
Everyone's like, oh, you're so smart. You're so smart. You know
Romaine, you told me that it took more than 300 hours to study. Do you remember this?
I do remember this. Yeah, I lived
that
it.
is a commitment.
That is all together.
So you passed your third level? Is that what happened?
The third level, yes, Carol. There's 3 levels, one, and then 2, and then 3. They get progressively harder. Then when you get to 3, if you pass it, you apply, you get your charter.
So do we like bow down as you walk around the newsroom?
Once I get my charter, Carol, you can bet.
I'm actually really impressed. I know
I am
it's
going
very
to dip it in gold and wrap it around my neck and just walk around the office.
As you should.
And make everyone refer to me as comma CFA.
Good.
You know what, guys? He ain't kidding.
No,
congratulations. Really, really, really impressive.
I appreciate it.
All right, guys, that's a wrap. Our cross-platform coverage. We got big bank earnings, of course, tomorrow. We'll be talking about that in our breakdown and our simulcast. So a wrap on radio, on TV, Bloomberg Originals, and of course on YouTube. We call it Beyond the Bell. We will see you again, same time, same place tomorrow. Bloomberg Radio on YouTube on Bloomberg Originals. So we've been talking a lot about geopolitical resets this week, or at least the appearance of such. Earlier in the week, we talked about some controversy concerning comments by French President Emmanuel Macron after a visit meeting with Chinese President Xi Jinping. Today, I guess a story along those lines, at least geopolitical lines, this time, though, involving China, Russia, and Saudi Arabia, and how that link between them poses a shock to the West potentially and a raft of possible problems for the U.S. economy. So a lot to get to. So let's head to our Washington, D.C. bureau where we find Bloomberg Economics chief economist Tom Orlick, and then here in our Bloomberg Interactive Brokers studio, Bloomberg News reporter Simone Foxman. Hey, Tom, I want to kick it off with you. Russia, China, Saudi Arabia. How linked are these economies increasingly becoming? And together, how do you guys maybe think on your team about the three of them potentially as an economic might in contrast to maybe where the U.S. is going?
On this, Carol, is the fact that Joe Biden, U.S. president, took a trip to Saudi Arabia last summer and said, look, guys, we need you to help us out. Please pump some more oil. And what has happened since then? Well, on not just one, but on two occasions, Saudi Arabia and their OPEC Plus group haven't raised oil output, they've cut oil output. The latest move coming on April the 2nd. And what does this tell us? Well, what it tells us is that one of the world's biggest oil producers is drifting out of the U.S. orbit. Who are they spending more time with? Well, let's not forget that Xi Jinping, China's president, made a pretty successful trip to Riyadh just a few short weeks ago.
And Simone, I want to bring you in here because you are just back from almost 4 years in the Middle East, in Qatar.
3.5.
3.5. We'll round up. We'll round up.
It does round it up.
Well, I want to get to kind of how investors should be thinking about this, but first, because of your lived experience there and your expertise, can you just talk to me a little bit about what you know about the Saudis thinking on a move like this? Are they thinking, you know, we want to move away from the U.S. and towards Russia or China, or is it just us for ourselves all the time? What's the move?
Look, I'd trace this back actually to September 2019. That is when a major Saudi oil facility, Abqaiq, was the victim of rocket attacks, said to be by allies of Iran. And the U.S. had a pretty limited response to that. Again, this was under Trump, so this is a long time ago, different administration in office, but a lot of the countries across the Middle East, allies of the United States, it sort of confirmed a fear that they already had, that the U.S. was unwilling or incapable to come to their aid when they needed it. And I think that's really the color that the idea that has colored everything we've seen over the last couple of years. So why is Saudi Arabia bowing to the United States' wishes and a Biden administration which is admittedly not as friendly to Saudi Arabia as the previous one? Why would Saudi Arabia potentially jeopardize its economic plans, or at least put a hold on them for the United States when, you know, that relationship is just more frailer than it was before?
You know, Tom, one of the things I think about, I was thinking about it today and kind of reading in earlier this morning and just watching what OPEC has been doing. And as we continue to talk about inflation, global inflation, you know, you think about the energy component, even if we, you know, we always talk about the focus on core, take out energy. Nonetheless, energy is a real cost to global economies. How do you guys increasingly factor in some of the geopolitical risks, maybe specifically around the energy economy, the oil economy, when it comes to economic growth, and just seeing who will be the economic superpowers going forward?
I mean, you say factoring in the geopolitical risk, Carol, but in some important respects, the story of the global economy in the last several years has really all been about the geopolitical risks, right? Let's think about the US-China trade war, all about geopolitics, big impact on global growth. Let's think about Russia's invasion of Ukraine, all about geopolitics, huge factor, driving energy prices, driving inflation, driving the Fed and European Central Bank tightening cycles. And now let's think about Saudi Arabia drifting outside of the US orbit, setting energy prices, energy production now based on what it needs at home, not based on the interests of the United States and the West, and all that means for the US CPI and Fed policy going forwards.
On those risks, though, I want to bring you back in, Simone, and then we'll go back to CPI, I think. How should investors be thinking about the geopolitical risks of Saudi not only working with Russia, but also having this critical deal with Iran brokered by Beijing?
Yeah, and not just that, talking the foreign minister meeting with the Syrian foreign minister. Bashar al-Assad has been, it seems to be slowly being brought back into the fold, that Iran-Saudi deal brokered by China. I think that investors are paying too little attention to the massive geopolitical shifts that are happening in the Middle East. You know, I think Ian Bremmer and his Eurasia group, Iran risk is something that showed up highly, but I don't think people sitting in New York City really have a great understanding of just how significant these geopolitical shifts are. On the other hand, let's not overstate the close relationships, the tightening relationships between Saudi Arabia and China, Saudi Arabia and Russia. It's not that Saudi is leaving the U.S. behind. Ultimately, Saudi, the U.S. is its key partner.
And has been for a while.
And has been for a while.
It's complicated, but yeah.
It's complicated, and it's getting more complicated, I think.
Yeah, it's interesting. Tom, you're so right, too, about geopolitical really has been such a driving force here going forward. When you think about the U.S., do they need to be increasingly thinking about a world where even some of its normal allies, that have also been, geopolitical but also economic partners, it's just going to continue to evolve and change. And that's dynamics that the U.S. central bank and central banks around the world are going to have to be dealing with.
So if we wind the clock back a couple of decades, the U.S. was the world's biggest economy by a very, very wide margin, and so also the world's dominant geopolitical force. Fast forward the clock to where we are today, and China has almost caught up to the United States. China's GDP is almost as big as US GDP, and based on most projections, it's not a sure thing. China could have some kind of financial crisis, some kind of property crash. But if that doesn't happen, China could well catch up with the United States and overtake them inside the next decade. Now, that economic shift has far-reaching geopolitical implications. You mentioned one of them at the start of this section, Carol. Emmanuel Macron sitting down with Xi Jinping and saying Europe won't be a vassal state of the United States. Europe will chart its own path in relations with China. And jobs, of course, a crucial part of that. On that trip, China agreed that they were going to buy a bunch of Airbus airplanes manufactured in France, manufactured in China. Now we see Saudi saying, we're not listening to you. We're going to set oil prices based on our own logic. And when we want to make peace with our neighbor, Iran, we're going to have China come and broker that deal. So the politics is following the economics, and the economics is showing that the U.S. is still the world's biggest economy, but perhaps that can't be counted on for that much longer.
And don't forget that the Gulf players, China is already many of theirs, the largest economic partner and largest trade partner has been for a very long time because oil goes to Asia.
China needs oil, and they've got it.
Right, oil goes to Asia. The U.S., has its own supplies.
I'm so glad both of you could join us because I do feel like we don't talk enough about kind of these interesting, evolving, complicated relationships, but it is something that is going to be set the tone for the business community, the market community, and certainly just the overall world, if you will, going forward. So thank you both. Tom Orlik, Chief Economist at Bloomberg Economics, on Zoom from Washington, D.C., right here in our studio. Simone Foxman, thank you so much. Good to have you back, stateside reporter here at Bloomberg News. You're listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all rallied today. We closed very close to session highs as investors cheered the latest inflation data. S&P 500 index up today by 54 points, a gain of 1.3%, extending the year-to-date gain now to 8%. The Dow today advanced 383 points, up by 1.1%. NASDAQ Composite Index up today by 236 points. That was a gain of just about 2%. Equities pushed higher as the latest readings on jobs and inflation came in slightly softer than expected. 10-year yield 3.44%, with the 2-year that's yielding 3.96%. Spot gold up 1.2% at $2,040 on gold. West Texas Intermediate down 1.1%, $82.31 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, along with Madison Mills, live in our Bloomberg Interactive Brokers studio on YouTube and, of course, on Bloomberg Originals on this Thursday. So I mentioned a little bit earlier that there's a headline out that reminds us that we're not completely out of COVID. A number of Asian nations are reporting an uptick in COVID-19 infections as the region treats the virus as an endemic, with the fresh wave exerting limited pressure on healthcare systems. So a little bit different than certainly what we saw at the height of the pandemic. So as a world generally, Maddie, I think it's safe to say that we're getting back to a more normal world when it comes to health issues like allergies, getting the flu, common colds.
Yeah, it certainly feels like we're in a more normal space than we were when we were all inside full time. And here with us for some thoughts on whether or not that is the case, hopefully giving us some things to be optimistic about. Back with us, Dr. Ian Lusbader, clinical professor at clinical professor of medicine at NYU Langone, on Zoom with us in New York City. Doctor, thank you so much for being here with us. How are you doing, first of all?
Good. Thanks, Madison and Carol. Always good to chat. Hope you guys are doing well. We're busy in the office. Patients are back. There's no end of New Yorkers who want to seek health care, that's for sure.
But no COVID?
Yeah, we're still seeing some COVID. They're definitely milder. Many patients are asking about yet another, fifth booster, although most people have had their fourth. And it's not clear. We still see some long COVID patients. Most are doing better. We don't really understand why. What is it about some people that develop more chronic issues after COVID or after, say, mono? Why do 1 out of 10 people who have mono develop chronic fatigue syndrome? Why do a small percentage of people who have COVID develop long COVID? What is long COVID? Why do some people recover faster than others? For many people, it's a very mild 3 or 4 days, runny nose, cough. Other people have hoarseness, GI issues that can last for weeks or months, brain fog. We don't really understand the immunology that well. So typically we tell people, the best thing is to try to prevent problems or strengthen yourself to be resilient. Diet, keep that BMI low. Exercise regularly. A lot of people were indoors for 2 years over COVID. They got out of shape. Obesity is really, over 40% of Americans are obese. So we have got to get up and get moving. Recent studies show that even 10 minutes a day of exercise can improve longevity. We used to say you had to do like 175 minutes a week, 20 minutes a day. Even moderate, however you define moderate, but 10 minutes a day of brisk walking, get the heart rate up, really has long-term benefits. We think vitamin D. Most people are vitamin D deficient. Mental health, socialize, meditation, doing kind things to people, positive energy can make a big difference in helping you deal with infections.
I totally buy into that. I'm a big believer that negative energy versus positive energy has a huge impact, or stress on individuals. You know, what's funny, or not funny, Ian, is that I got sick for the first time in a long time, other than COVID, which I had in June. I got the flu. It was quite a doozy, really knocked me off. I mean, I still wear a mask on the subway and some other places because I just don't want to get sick anymore. So I love that you're getting into kind of how do we think about kind of general care. And we also know that for those, you know, going into COVID, if you were healthier, it wasn't a guarantee, but it maybe put you on a better path in terms of recovery. And so I do think about, we all need to think once again about general health.
Yeah, I think prevention is key. Rest and hydration if you do get any viral infection. Do speak to your doctor. We do have Tamiflu for influenza. The earlier you take it, works great. 75 milligrams twice a day for 5 days, 10 pills, very effective. So I hope you took that, or at least thought about that. If, you know, we do nasal swabs for the flu.
It was too late, and so it was straight NyQuil and stuff to just knock me out and make me sleep.
Yeah. Symptomatic treatment.
Yeah.
Paxlovid, we've talked about on the show before, can be very effective. You know, again, it has to be started early. But even other viral infections like shingles, we see with people who are stressed out, fatigue, we see it even in young people. And we have treatment, Valtrex, Valcyclovir. So there are antivirals, there are healthy things to do. Nasal irrigation is very good to get out virions and bacteria like a neti pot. So there are holistic approaches and really medical approaches to help people either prevent getting sick or bouncing back. I like the idea, you know, masks are not 100%. We've talked about that during the height of things. But if you're on a crowded train, I would absolutely wear a mask. If you're going to social events, outside is better than inside now that the weather's better. You know, unfortunately, there are people who have COVID who have no symptoms until a few days after you meet them, and they call you and say, you know, I was just diagnosed with COVID. Right. Unfortunately, they exposed you. Yeah. So it's hard. It's an imperfect system.
Hey, Ian, one thing we want to ask you as a doctor, we caught up with the CEO of WW, really interesting, you know, formerly Weight Watchers, and they just closed on an acquisition of a telehealth provider that's going to help it access the growing market for new obesity drugs. And, you know, we talked a lot about that specifically in some of the controversy around Ozempic. What do you know, and obviously they're about, you know, helping people lose weight, eat better, you know, and I think they're thinking about kind of the whole tool basket, if you will, to help people with that. What do you think about that? Somebody from the medical community, and they're not going to be, we were told, not specifically prescribing it, right? And they are not hiring the doctors or something to do it.
Yeah.
But I do wonder,
separation of church and state, for sure.
Right?
Yeah.
It's so, but what's your take as on something like that?
We see a lot of obesity, unfortunately, and you really need a global approach, right? We talk about diet. We have them see nutritionists. There are many people, different opinions about diet. We certainly use medications. The GLP-1 agonists like Mounjaro from Lilly or Ozempic from Novo, you know, can be very potent. Trulicity. Some insurance does not cover it, even for people who are obese. They only require, you know, that they have type 2 diabetes, which most but not everyone has. So insurance can give some pushback. I think it's always better if you can to see a physician, get an exam, let them feel your thyroid, get a history, make sure there's no history of thyroid or other issues, because Ozempic, although well tolerated, has, you know, rare side effects, can give you GI side effects, nausea, vomiting, kidney issues, pancreas, rarely, but they should ask about it. But it can be very helpful to really kickstart that weight loss process. But also there are some people who unfortunately wind up getting a gastric sleeve procedure or even a gastric bypass. You know, we try to work very hard, and the meds are very helpful. They're not a cure-all, and there are some people who either don't tolerate them or can eat past them. But overall, I think it's a great tool to help people deal with weight. I'm a little concerned. I wish, you know, we can do a lot by telemedicine.
Right.
You can't do everything. And I think certainly having a personal relationship when you're dealing with a chronic issue like diabetes or weight, nutrition is very important. But there's probably a role if someone doesn't want to come in. telehealth can be helpful, but it's not. I think a personal relationship is best.
Are you not doing as much telehealth anymore? Just quickly.
No, much more people are coming in. We still do telehealth with some people. It's very helpful, but I like to see my patients in person ideally, but telehealth can be helpful.
Okay, well, I want to ask you, we're going to have a short amount of time for this. The U.S. government issued a new warning about a mix of stuff getting in fentanyl that's fueling another wave of overdose. The administration is asking for funding. If you controlled that funding, what would you tell the Biden administration to do to prevent those fentanyl deaths?
There are over 100,000 deaths related to opioid overdoses. We need to get Narcan out in the community, but we really need to, sorry to be political, you got to seal the border. You know, the pre-chemicals are made in China. They're synthesized to fentanyl, and the cartels make a lot of money due to our desire for recreational drugs. And the fentanyl gets mixed in. It's 50 times more potent than morphine. It's more potent than heroin, and it can block your breathing. People take a small amount. They don't even know it's in their recreational, methamphetamine or recreational drug, and they stop breathing.
And Narcan about to be sold over the counter. Good news, right?
Good news, yeah. I mean, everyone should carry it. I mean, look, you can't always be sure if a person is down on the street, what they're down from.
Right.
But if you think that it's related to a drug OD, you squirt it up their nose. It'll buy you some time before you call an ambulance.
Yeah.
We need to curb our desire for recreational drugs.
Right.
Do meditation, do community service, do positive things, and you'll feel better.
Dr. Ian Lustbader over at NYU Langone. Always appreciate it. Be well. All right, let's get a check on world and national news. Back to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. A suspect is in custody in connection with the leak of sensitive Pentagon documents. Attorney General Merrick Garland identified him as 21-year-old Jack Teixeira.
Teixeira is an employee of the United States Air Force National Guard. FBI agents took Teixeira into custody earlier this afternoon without incident. He will have an initial appearance at the U.S. District Court for the District of Massachusetts.
Garland says he'll be charged with unauthorized removal, retention, and transmission of classified national defense information. The New York Times reported earlier Teixeira was the leader of a gaming chat group where the documents first appeared. President Biden is still in Ireland and entered the Irish Parliament today as if it were a State of the Union, shaking hands left and right before speaking to members and prominent Irish guests.
I'm at home. After that word of Gaelic, the president reminisced about his ancestry and about the Irish role in the United States throughout its history.
Ireland and the United States are standing together to oppose Russia's brutal aggression and support the brave people of Ukraine, because we know what it means to fight for democracy. Today, we're more united and more determined than ever to defend the values that make us strong.
After sending millions of immigrants away, the president said, Ireland is now welcoming immigrants and refugees, including 80,000 Ukrainians. In Washington, Irv Chapman, Bloomberg Radio.
The Biden administration will ask the U.S. Supreme Court to intervene and issue an emergency order to protect the availability of a widely used abortion pill. The announcement comes after a federal appeals court ruled that the drug can still be used, but reduced the period of pregnancy when it can be taken and said it would not be dispensed by mail. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. A solid advance for the U.S. stock market today. The Dow, the S&P, NASDAQ 100 index, and the Russell 2000 all solidly in the green, with the S&P up 54, higher today by 1.3%. Latest readings on jobs and inflation came in slightly softer than expected, and that was a boost for those hoping the Federal Reserve may be approaching the endpoint of an aggressive interest rate hike. As for the overall mood of the market, Hillary Kramer is Chief Investment Officer at Kramer Capital Research, and she was our guest right here on Bloomberg Business Week.
This is a good market right where we are now because there's been so much fear about potential banking collapse, but it is not a Lehman moment, and we will see very soon with JP Morgan, Citigroup, Wells Fargo, they have been these banks have been preparing their numbers, and I don't think we're going to have any downside surprises, only upside surprises.
And today we had all three of those names that she mentioned moving higher today. JP Morgan Chase up 0.4%, Citigroup up 0.8%, and Wells Fargo up by 1.2%. Complete coverage tomorrow morning as those earnings reports hit the tape. We've got you covered here on Bloomberg. 10-year yield 3.44%, the 2-year 3.96%, spot gold up 1.3%, 20.40 the ounce, and West Texas Intermediate crude down 1%, 82.40 a barrel. Today, NASDAQ up 236, up 2%, S&P up 54, up by 1.3%, the Dow up 383, that was a gain of 1.1%. The SPDR, Dow Jones Industrial Average ETF, otherwise known as the Diamonds, up today by 1.2%, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this next company, founded over 100 years ago, we're talking about Helzberg Diamonds. They operate more than, I think, roughly 200 stores around the country. They also sell online. It is a company that is owned by Warren Buffett's Berkshire Hathaway. It's been growing diamonds in the lab for the past 6 years, and so we thought we wanted to talk a little bit about what they are up to. And they're also amping up their work when it comes to sustainable and ethically sourced diamonds. So let's get to it. Julie Yoakum is with us. She's President and Chief Merchandising Officer of Helzberg Diamonds, and she joins us via Zoom from Kansas City, Missouri. Julie, great to have you here with us. How are you?
Thank you. Nice to hear you. I'm good.
No, I know. It's like this world. We're seeing, we're hearing, we're in the metaverse. It's like all over the place. Listen, a lot to talk about. We want to get into your business, but I have to ask, especially when we say, you're owned by Warren Buffett and Berkshire Hathaway, what's it like to be a Berkshire-owned company? And does Warren Buffett and the team drop by ever, buying any diamonds? Tell us how it works.
Gosh, I wish he would. We could only hope that he would buy a lot of diamonds from us. But it's actually a great company to be owned by and associated with. They obviously work with incredibly high ethics themselves. They allow their different companies to operate independently, and they expect us to deliver to the bottom line. So we work hard to do that every day.
All right, so let's talk about your business. How's it going? How's demand? Consumers shopping? Are they shopping down? Valentine's Day, was it good? Mother's Day, maybe not so much? Give us an idea.
Yeah, so we came out of last year really strong, one of our best years ever. And, certainly we are planning conservatively, still trying to figure out how the customer and the consumer is going to settle in after what, we don't really know what right looks like yet in this industry or in the retail market. But we actually came out of Valentine's Day strong. I now call it lovingly Valentine's Week. We know that there's a lot of procrastinators. So
I do too at my home, call it Valentine's Day. No.
Yes. Yeah, I mean, it depends on what day of the week it falls on. So we like to, make sure that every Valentine purchaser, has that full week. So we ended up coming out of that fine, and we are headed into Mother's Day here just right around the corner, and have high hopes for that as well.
Okay, talk to me about the ethical diamond growing business and what that looks like and the consumer demand specifically for that.
Yes, it's a good question. So, Helzberg got into the lab-grown business about 5 years ago. We were the first ones in as a national retailer. So we were careful about how we dipped our toe in it, but really saw an opportunity and have seen, great success with that. As the market has become more saturated and there's a lot of people that are in it, because we were first in, we believe it's really important to stay ahead of the game and understand what we can do technologically to really respond to the consumer demand in terms of how they purchase and what they expect from us. So
do consumers really care? I know I do. And I increasingly, if I was buying my engagement ring, or my husband was, or my fiance at the time, was doing it today, I would care. I would want to make sure.
Yes, and certainly the younger millennial and very fast approaching Gen Z, who is in our sweet spot for particularly engagement purchasing, they've grown up, knowing where their produce comes from. So it's no different now for a lot of their products, whether it's apparel and certainly an investment purchase that is going to be, on their finger for hopefully a lifetime. So what we are finding with the new launch of Rev is that the sustainability third-party certification that we have done for it has been incredibly well received and is really resonating with this younger customer. So we believe that there is a long tail on this, and I'm leaning into it thinking that it's not just one line and done. It needs to be the way that we really start thinking about it, and it needs to be how we manage our business.
Well, and lab-grown diamonds also have a pretty nice discount as well, right? Can you tell me, let's say a 4-carat diamond, what is the cost differential between lab-grown and the quote-unquote real thing?
Maddie, was something you want to share with us?
I would like a big one someday. I got to find the guy first, but I do plan on a large one. So that's
4 carats good. Well, so here's the deal. So the thing about lab-grown diamonds is because they don't take millions of years to grow, they take only months. The technology allows you now to actually grow really, really beautiful diamonds. So initially, even 5 years ago, that's just how fast this technology is moving. We had diamonds that in our lab grown that were close to a mine diamond in our stores that could be comparable.
In terms of cost?
In terms of quality.
Oh, quality.
So at that
they
time,
look the same. They look pretty similar, right?
They do. They're actually lab-grown diamonds are real diamonds. They are grown from a natural diamond seed, and so really the only difference between them is that one's below the ground and one's above the ground in terms of its growing, and they have exactly the same chemical properties. So it's certainly to a layman, you could not tell the difference. It really needs to go through specific diamond testing to understand which comes from the ground and which comes from above the ground. But the beautiful part about it is that the value associated with it, to your earlier question, is that you can get a lab-grown diamond at a really a large one and at a really nice quality for at least a third less, sometimes more, and actually the larger you get, the less it is, because the larger a mine diamond, the rarer they are. And so the price differential actually is more significant the larger you go.
Interesting.
Or to buy a large diamond.
Hey, just 25 seconds. If you're making them in the lab, why wouldn't they all be just like, when it comes to the 4 C's, just be perfect diamonds? Why would you even do like a lower, or do you do lower qualities? Just really quickly.
Yeah. So actually, because it is the same properties, that you can't grow a perfect diamond. They all have imperfections, just like a diamond below the ground. So we are very particular about the diamond qualities that we allow.
Right.
But a diamond is a diamond.
Hey, 10 seconds. Is there a day when we just are selling lab-grown diamonds? Probably.
I wouldn't put that out of the question.
All right, really fascinating.
Cool. I love it.
4 carats there, Maddie Mills, huh?
I mean, I don't know. I don't even know what that looks like, to be honest.
Julie Yoakum, President and Chief Merchandising Officer of Hillsburg Diamond. Such a great conversation on Zoom from Kansas City, Missouri. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Delta Airlines shares did move lower today as the rest of the market was advancing. Delta was down 1.1%. It sees profit this quarter topping Wall Street's estimates, boosted by steady bookings heading into the crucial summer travel season, even as it posted weaker than expected results for the past quarter. CEO Ed Bastian says revenue and average fares continue to grow, even if the pace of demand across the industry has moderated from a recent post-pandemic surge. Amazon CEO Andy Jassy is pledging to keep investing in big long-term bets despite cost cuts and an uncertain economy. And with more on that story, here's Bloomberg's Denise Pellegrini.
Charlie, Amazon is moving ahead with this global expansion and efforts to become a bigger player in groceries and healthcare. And in his second letter to shareholders as CEO, Jassy says he is optimistic, quote, "We'll emerge from this challenging macroeconomic time in a stronger position than when we entered it," end quote. Now, his letter coincides with the period of rolling layoffs at the Seattle-based company as execs seek to cut costs and wind down marginal or unprofitable projects. And Amazon started cutting jobs in November. They laid off thousands more in January. And Amazon did also announce plans today to join the generative AI race with technology aimed at cloud customers. And they're also talking about a marketplace for AI tools from other companies, Charlie.
And that's Denise Pellegrini. Amazon shares did advance today, up by 4.7%. And those are some of the company stories we're following at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
We've got more Business Week coming up. I'm Madison Mills here with Carol Masser. But first, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Madison. A 21-year-old Air National Guardsman faces charges in connection with the leak of highly classified documents, including maps, intelligence updates, and the assessment of Russia's war in Ukraine. Jack Teixeira works for the Massachusetts Air National Guard, was taken into custody this afternoon without incident. The Pentagon says this was a deliberate criminal act. Well, the abortion pill debate may be winding up before the Supreme Court. Bloomberg's Amy Morris has the latest from Washington.
After a Texas judge's ruling would have suspended mifeprstone's approval by the Food and Drug Administration, a federal appeals court limited that ruling, saying the pill can still be used for now, but with restrictions. Now the Department of Justice is stepping in. Attorney General Merrick Garland released a statement saying the Justice Department will ask the Supreme Court for an emergency order to put any action on hold to protect the pill's availability. In Washington, I'm Amy Morris, Bloomberg Radio.
The U.S. and Ireland are standing together to oppose Russia's brutal aggression in Ukraine. That's what President Biden declared during an address to the Irish Parliament today.
Today, Ireland and the United States are standing together to oppose Russia's brutal aggression and support the brave people of Ukraine.
The president praised Ireland for accepting nearly 80,000 refugees since the war broke out in early 2022. He said Russian President Vladimir Putin was wrong when he thought the world would look the other way when he invaded Ukraine. Biden also added the U.S. will remain Ireland's closest partner and most enthusiastic supporter. Well, the Tampa Bay Rays are on their way to making baseball history. Tampa topped the Boston Red Sox today 9-3 to improve to 13-0 on the season. That ties the MLB record for wins to begin a season. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
You're listening to Bloomberg Business Week. It's now time for Wall Street Daily. David Weston speaks to the top names in finance and economics, taking on the week's biggest issues on Wall Street.
Well, as you know, the 2023 spring meetings of the World Bank and IMF are set to wrap up on Friday. The world's two superpowers have been a big focus of discussion all week. Earlier today, in our Wall Street Week Daily segment, David Weston catching up with Rock Creek CEO Afsana Beschloss about her takeaways from the summit.
I think the biggest topic, which has not been noticed by many, is that Chinese debt is a huge amount of total debt. Let me just put it in perspective. 300 billion total global bond market. About 100 trillion of that is emerging markets. About 50 million of that is Chinese debt markets. Another 100 is emerging markets ex-China. China has been loaning to emerging markets in very large sums over the last 10